when the Bitcoin founder created Bitcoin, he linked to this article, I think because he wanted to focus on how unsustainable the current financial system is, and how Bitcoin may be a part of the solution to these problems. So of course the governments decided to bail out the banks, which made the system keep going for some more time. So in order to understand the financial system we have, it's very important to understand the monetary system, because the two are very closely tied together. So I've made this to explain as simply as possible how money is created in today's society. It's something that's not very well known, but this is basically how it works. And I wrote fiat money because that's what we use today. It's basically money that's issued by the government or by the central bank, declared legal tender, and it's not really backed by anything of value like gold and silver used to be. So it works like this. The central bank or the government buys government bonds, and this is a continuing process. It's not a one-time occurrence. And when this happens, it creates money. The central bank simply creates the deposit that then is delivered over to the government. And this process is what determines what the interest rate will be. So when the central banks decide to lower the interest rate, they will simply do more of this purchasing, which will then increase the money supply. And this method has been quite effective in bringing down the interest rate. However, now that we are at record low interest rates near zero, this does not really work anymore. So what the central bank does now is what's called quantitative easing, and that's when they buy financial assets like corporate bonds. And this also, as well as create more money, it really gives a boost to the stock markets and assets prices. And so the third way in which money is created is by commercial and retail banks, and this is what happens when mortgages are issued, or car loans, or loans between banks, and this is what makes up for most of the money creation. So when a mortgage is being made, that money that money that the borrower receives did not exist until the point when it was in that bank account. So technically, it's not really loaning, because what you get did not belong to anybody before that loan is made. So that's how money is created in the current financial system. It does not really take any work to do this. It's simply typing numbers into a screen, and technically this can be done indefinitely. So how money is being made in Bitcoin is very different, because here there actually needs to be put some labor into producing these Bitcoins. So the Bitcoin miners have two tasks. One is to confirm transactions, and the other one is to write the general ledger, also known as the blockchain. And when this task is being done for a set period of time, it's called a block. And for each block that's completed, you get a block reward. And this block reward is being distributed to the miners. And the Bitcoin halving is all about how this reward is being cut in half, thus making the inflation less than what it used to be. And with Bitcoin, there's also a set limit to how much Bitcoins can actually be created. So there are very much restrictions on how Bitcoins can be created. And so this is why Bitcoin is so much more superior, because it cannot be controlled by a certain group of people who decides what the interest rate is going to be. The prices of Bitcoin is always determined by the market makers, the ones who supply the Bitcoin and the ones who demand the Bitcoin. and yes, and it cannot be inflated because it's all about how they are mined, and it has its value because people actually value Bitcoin. It's not because the laws are set in a certain way. So how does this play into the financial markets? Well, the financial markets today are very tied into the monetary policies. And the business cycle we see in rising stock prices, rising housing prices, depressions and recessions are also part of this cycle. And it generally goes like this. So the interest rates are being lowered by the government. And when this happens, this makes a whole lot of business activities possible that did not used to be possible at the old interest rates. And this is because now loans are cheaper, so people are able to bid up the prices more for housing. Business projects that did not used to be profitable because of the lower interest rates are now profitable because the interest rate is lower. So when this lowering of the interest rate happens, it creates a lot of good numbers in short term, and economists will like to see it to say that this is great and this is how it's supposed to be. But what eventually happens is that the market gets fed up with all these loans, and when the consumers stop borrowing the money, that demand that was created by the credit in the first place will then stop, and that also means that the businesses that thrived because of this credit-driven demand, they will not be able anymore to sustain their businesses. So this is when the bust period happens, and businesses will have to lay off their workers, and housing prices cannot be kept at the high level because people are no longer able to bid up the prices with these loans. And this is when we see the depression. And it is usually followed by another lowering of the interest rate, which means that this cycle can be started again, and that's what keeps this system going on and on. So financial crisis can happen in a lot of different severities, and in a Bitcoin economy, purely Bitcoin based, I think we would still see financial crisis, but they would be a result of or they would be on local levels because of innovation, meaning smarter solutions will outcompete current businesses, and that means like certain areas which are very dependent on certain businesses will have to find something new to do, and that could cause a sort of a financial crisis. And also natural disasters and bad weather for very weather dependent type of businesses could also see financial crises, but those you can't really do a whole lot about. But when it comes to these huge global scale financial crises, those are caused by monetary policy, and because there is no such thing as a monetary policy in Bitcoin, I think that problem would be eliminated. And so some examples of these malinvestments, or these investments that's being made because the credit is low and then fail when things return to their default position. What we saw during the dot-com bubble in 2001, housing bubble in 2007, and we now have this student loan bubble, and there is also a derivative bubble. And the two last ones there have yet to burst, but they are very similar in nature, as they're a result of borrowed funds driving up the costs, and eventually it's going to end the same way. So this graph shows in blue the interest rate since the 60s, and in red is the SP 500, which are pretty accurate indicator of how the US stock market is performing. And as you can see, since the 80s, the interest rates has gone down, and the stock market has gone pretty much straight up. And the central bankers like to control the economy, so that when the economy needs to be boosted, they like to lower the interest rate, and when it's going too well, they need to stop it from overheating. And so what they do is that they raise the interest rate as the economy is going too well, and that's what eventually happened in 2000. And when the credit-driven demand stopped, that's when the stock market had to come down. And the result was, of course, to lower the interest rates again, which started the cycle again. And the same thing happened in 2007 when interest rates had gone up. And of course, when the market crashed, interest rates are down now at record low, as well as stock markets are at record highs. So this is also the SP 500. I saw this chart on zerohedge.com. It's a financial news website, and these technical indicators, it's not like they're correct 100% of the time. It's all about probabilities. But these moving averages, they follow the general trends in the markets, and when these lines cross, has only happened 2 times before in the past 20 years, and it's been a crash that's followed both times since. And it just happened again now in 2016. And these are, in upper left is the Italian stock market, top right is German, down left is France, and down right is England. They all start at 2003 and goes till yesterday. And as you can see, the stock markets have not recovered since the highs in April 2015. And yes, I brought with me this Deutsche Bank as well, because it has been quite a bit in media lately because of how it's been performing. So it reached its top in 2007 at 140, and now it's down at just below 13. And this is one of the biggest financial institutions in the entire world, and they do also owe a lot of money to different banks. And so if this bank goes down, it's gonna be or cause a chain reaction throughout the financial system. And this bank has also been a major part of this derivative bubble. And I brought some quotes as well from famous investors. You can read them yourself. And these are investors who tend to make most of their money during times of crisis. And they all pretty much say the same thing. Most of them run to gold. Yes, that's my presentation.